Carrying a Forex card, in fact, is all the more expensive as opposed to carrying a debit or a credit card, because there is no limit on TCS. I mean, there is no threshold mark. So it essentially means even if you're spending 1 lakh rupee using a Forex card, you will still attract 20% TCS, Karthik, starting July 1st.
From the 1st of July, that's right. So, travelers' checks or Forex cards, travelers' checks actually converted themselves, sort of, the metamorphosis happened into Forex cards. And Forex cards were actually almost as good as carrying cash, with the security of plastic and the lesser risk as compared to carrying physical cash in your pockets. So, so Forex cards really found their market, and you had every bank practically issuing a Forex card. You had the likes of Thomas Cook issuing Forex cards, which continues till date. But unfortunately, with this new ruling on TCS, there was public backlash which got the government to retract its stand on credit and debit card spending internationally, and they were brought into the same ambit of 7 lakh rupees, and only above that would a 20% TCS apply. But that limit, like you said, of 7 lakh rupees on Forex cards and cash conversion is 0, which means now owning a Forex card, and if you want to load up a Forex card with 1 lakh rupees, that's the example you gave, from the 1st of July will actually be 1,20,000 rupees of your cash gone. So, Forex cards otherwise had great advantage over debit and credit cards on multiple factors. Number one, there was no very low markup fee, right? Number two, there was hardly any transaction fee. In most cases, anytime you swipe. So, what's a markup fee? Let's look at these three components: Forex, markup, and ATM withdrawal.
Sure.
So, when you carried a Forex card, the markup fee, which is actually the fee that the bank that loads your Forex card charges over the spot rate of the exchange value of the currency. So, let's say currency, a US dollar today is trading at about 83 rupees. The Forex card, when you load that up, would charge a very nominal 0.25% or so markup fee when you load your Forex card with, let's say, the 1 lakh rupees.
Okay.
But what this did, why you did not mind paying this, was that when you're traveling abroad, and let's say you're abroad for a period of 7-8 days, a month maybe, the currency prices could fluctuate.
Okay.
So, when you use your credit card or your debit card, it would charge you the conversion day of that day.
Right.
Plus an additional markup, plus a transaction fee and all of that, right? So, you locked in a rate when you loaded money into a Forex card. But you paid a very small markup fee. Okay. Then every time you used your Forex card internationally to swipe at any store or any restaurant, there would be no transaction fee. And anytime you withdrew money from an ATM, it was advised that withdraw in bulk, because there was a little 150-200 rupee ATM withdrawal fee that you would pay on a Forex card. Compare this to credit cards. On a credit card, you don't safeguard yourself, because anytime you swipe, it is that day's exchange rate, spot rate, which is applicable, and the markup rate is high. Credit card companies have charged up to 3.5% as markup fee. So, 83 rupees to a dollar spot rate today, add a 3.5 to it, that makes the dollar more expensive by about 2.5 rupees. So, it'll end up, every transaction of a dollar, instead of being 83 rupees, will end up costing you about 86 rupees.
Okay.
Right. Next is your transaction fee. Over and above that, banks would charge a 2.75% or so transaction fee.
Every time you
swipe, right? And every time you went and withdrew money from the ATM, there would be an additional transaction fee for that also. So, overall, using credit cards and debit cards internationally was far more expensive than loading money in a Forex card. For people like us, it would also keep us restricted into a budget that, hey, spend no more, this is where you should stretch yourself and nothing beyond that.
Right.
But now with this 20% with no threshold of 7 lakh rupees added on Forex cards, obviously it undoes every other advantage on account of markup fee, transaction fee and exchange fee, which were advantages for Forex cards.
Not looking too great, and I'm still trying to understand, decipher as to why is there an attempt to charge as much as 20% and not a 5% or a 10%? I mean, and this basically, this logic eludes me. I don't know why this is happening. I don't know what the reasoning is behind this move, and surely I personally don't understand why there has to be a 20% charge if you were to be able to identify people who are spending money abroad and more money than what they're declaring, you could easily do that by charging 5%.
I agree, Shweta. That just makes the two of us, honestly. Even I am grappling to find any logic in this 20%, but thinking really hard, I think it boils down to, okay, let's assume that the government is actually going after tax evaders, and tax evaders who are traveling abroad would typically be in the assumed income level of 20 lakhs and more every year. Presumption.
Okay.
No numbers, statistics
Absolutely.
to back me up, right? So if you're in that tax bracket, you owe the government 20% tax. And if you're somebody who's evading that tax, then every time you're making a high value transaction or traveling abroad, the government tries to hold you to that 20% tax bracket and says that, hey, I believe, my assumption is that you owe me 20% of your income. Let me hold this for you. You come back and you reconcile. If you are not liable to pay me this 20%, I'll give it back to you at a later stage. I'll give it back to you. But I think the assumption is that 20% would be the minimum salary tax slab applicable for people who undertake international travel. But of course, the whole MO that the government will have to put in place, and how do you discern whether 7 lakh rupees has been breached or not in the case of credit or debit cards, and how would you tally, let's say, in case a spend being made internationally is for business purpose, an official corporate tour or personal expense, and especially now with families also coming into the ambit. If you are a family person and if you're traveling with a family of 3 or 4 people, then each one of them making transactions, while the taxpayer or the income earner may be just one person or 2 people, then how does the third person who's using a card, not yet earning, maybe still a dependent, 16, 17 years of age, using and still paying 20% tax, how do you sort of reconcile these multiple people paying 20% is logic that eludes me as well. So I don't have an answer for you. I hope people in the finance ministry have an answer to that, and I hope the taxman has an answer to that. Otherwise, we are looking at a lot of trouble at the end of the financial year.
Absolutely, and more importantly, especially quickly on the credit card debate, because we discussed that international use of credit card. There was a huge backlash from a lot of people asking whether government is preventing us from traveling abroad, and why is that? If that is the reason, why should that be? And we saw after a couple of weeks that there was a revision and there was a limit attested to it, that this is the threshold. If you spend beyond that, you attract 20%. My understanding of this is, now there's not been enough backlash around Forex cards, but we know, but we know with credit card in the ambit of higher TCS, with Forex cards in the ambit of higher TCS, this is surely going to dent people's ability to spend on trips abroad, go abroad, and that's not a very good thing for middle class at this point.
No, I see it differently, Shweta. If the government had not rolled back the decision of the threshold, LRS threshold of 7 lakh rupees, I would have agreed with you, like I did about a week ago. But I think in the case of Forex cards and cash conversion, that product category is going to die. So people are not going to see any merit in opting for a Forex card
anymore.
And they would rather, ensure that the civil rate is okay and they can get a credit card with a sizable value, or load up their debit cards and pay these markup and transaction fees and ATM withdrawal fees rather than a straight up 20% hit on a Forex card. So I think this product category is going to cease to exist over time.
And I need a quick clarification. If someone were to be going abroad, spending less than 7 lakh rupee, use a credit card, would they still be paying 5% TCS?
I don't think so. 5% yes.
5%,
20%
right?
no.
Not 20%.
Not 20%.
20% kicks in only after you
breach the
7 lakh rupee threshold. So going abroad there made more and more expensive, as you are likely to attract 20% TCS if you are spending money abroad using a credit or a debit card, but you will still be attracting you're spending more than 7 lakh rupee, but you'd still be attracting a 20% TCS if you are using a Forex card. There is no threshold to that. So any money you spend abroad, each expense will entail a 20% tax deducted at source that you can claim later on if you are eligible, but that will only happen a year and a half later.